Hi, I'm Phil Town for Rule 1 Investing, and we're going to talk this time about earnings per share. Earnings per share are the net earnings of the company that are divided by the number of shares in the company, and you get a per share version of how the company is doing in terms of its profits. So another word for earnings per share is profit per share, and it's essentially what the accountants tell you you're making out of all the efforts that you're making with the company. What's your profit? The problem with earnings per share, though, is that profit is calculated in public companies using what's called accrual accounting systems. And what it means is that when you calculate the profit, you're also calculating it as if you got paid, even if you didn't get paid. And as if you had paid out all of your expenses, even if you haven't paid them yet. And there are really good reasons why people do that, why the accountants insist on that way of accounting. But the problem it creates is that companies can have pretty good earnings per share and still almost go broke because they don't actually have cash. So we want to put earnings per share at the top of the class of the things we're looking at in terms of understanding the value of the business, but we also want to make sure that the cash flow of the company is as good as the earnings per share. Now, with Rule 1 Investing, we use earnings per share to calculate two very important ways of figuring out the value of the business. The first way is to calculate what those earnings per share will be growing into over the next 10 years or so, and then figure out the value of the business 10 years from now because of its growth of earnings per share, and then bring that back to today and decide what we'd pay for it. We call this the margin of safety analysis. And the second thing we do with earnings per share is figure out with basically a kind of a theoretical understanding of if I got to keep all the earnings per share, if it really was cash, and I kept it all in my pocket, how many years would it take before I got back the money that I paid for this company per share? So for example, if I paid $160 per share for IBM, what I would be trying to figure out is how many years of earnings per share will it take before I've got my money back? And we call that a payback time analysis. So those two analyses use earnings per share, and in both of them, we try to make sure we understand that we know earnings per share is a GAAP accounting system, and we've got to calculate what the free cash flow is so that we be sure we've got a good number for earnings per share. So we'll talk about both of those things as we go forward here. Earnings per share, very, very important. One of the key numbers we really look at in terms of figuring out the value of the business. Now, if you like what you've seen here, subscribe to my channel for more content. This is Phil Town. Time to go play.